expand merchant relationship. While others are joining, we'll start the webinar on time. The webinar focuses on expanding merchant relationships, boost transaction volumes, and drive sustainable revenue growth with added benefits of AI-powered FR. It also demonstrates plug-and-play merchant lifecycle management suite covering digital onboarding, risk scoring, reconciliation, settlement, and compliance of all white labeled and bank print. The webinar is presented by Sri Nishant Shekhar from Vigofen, who brings deep expertise in UPI payment gateways and fraud risk management. The questions, if any, are there to be put on the chart. So the questions will be answered once the webinar will completed. The webinar duration is 30 minutes per presentation and 30 minutes per question answers. Over to Sri Nishant Shekhar. You are on mute, sir.
Hi, can you hear me all right?
Yes, yes.
All right. Thank you so much, Srinivas, sir, for the kind introduction. So, as far as I like it, we'll start with the discussion and then we'll go to the question answer towards the end. I'll be presenting my screen. Give me one second. All right. I hope you can see the screen.
Yes.
All right, great. So, sorry. So, we would be covering the new generation of acquiring business and how the AcquireX platform, which is AI-powered merchant platform offering from Vigofin, can help banks, achieve this new age. So, as an event synopsis, we'll just cover why is UPI more relevant today and how it kind of adds value for anybody who is wanting to get into acquiring today. And we'll also showcase the capability of AcquireX, which is the merchant platform, which is integrated in terms of onboarding, relationship, and driving sustainable revenue growth with added power of FRM. We'll present the market opportunity which exists today and how it can directly be translated into multi-fold CASA throughput and transaction-based revenue.
Nishantji, can you start from beginning because in between we're not able to hear you.
Is it?
Yeah.
Can you hear me now?
Yes. Yes.
All right. Just let me know, sir, if there is audio issues. So we'll, as Sir has highlighted, we will be discussing about how we can leverage UPI for driving merchant growth or acquiring business for the banks, and what it would require for a bank to kind of get on board onto this bandwagon, and how we can help the banks to come on board with our AI-powered platform, which is AcquireX. Right. Right. So, as a synopsis, we would discuss how the present, what is the present market opportunity and how it can be directly translated into a CASA growth and transaction-based revenue, and almost to the tune of 100 crores for the bank today. Also, we'll talk about how we can bridge the digital divide for the banks who aspire to compete with different private players and fintech. Also, we'll demonstrate what our product suite is in terms of merchant lifecycle management, risk scoring, reconciliation, and settlement, and how it can be more bank friendly and how it can be utilized by different banks going forward. So, just as we discussed, we'll talk about market opportunity first. So this is RBI published data any which ways. I'm sure all of you are quite aware that UPI now commands 83% of the digital retail payments in terms of volume. And the second closest is IMPS, NEFT, and FASTag combined, which is around 14%. This 83% in next couple of years is supposed to go to, estimated to go to at about 91%. So what traditionally or historically we have been talking of multi-scheme payment infra in terms of cards, wallets, NFCs and stuff. But with 91% command on UPI, there is not so much need of going to a multi-scheme and spreading ourselves thin. We can focus on UPI and conquer the inquiring market through this route. In terms of UPI market, that is of 83%, 63% is what is merchant payments. So which shows a good uptake by merchant community. Now this 63% translates on at about 27% of the total value of the ecosystem. Now, when we say 27%, if you look at the size of it, it's around 670,000 crores. So that itself is a large business, and I'm sure, as you might be thinking that this place is already crowded. There are large fintechs and stuff. So is it worth getting into this business so late? So my answer to that is absolute resounding yes, because this market is another 3 to 5 years is supposed to grow at least 20-fold, and I have been moderate in writing 20-fold. It's actually expected to go around 40-fold. Right. So this where we are right now is a can't miss moment actually, right? So there was a cusp in 17-18 when UPI came and everybody came onto bandwagon, and then fintechs came over, and since then they have flourished, as in there are n number of aggregators in the market. And what they did was essentially KYC responsibility rested on the bank. Transaction routing happened through the bank, money was held in the bank, settlement was done through the bank. So all through, the banks were used, banks channels were used, bank resources were utilized. But when it came to merchant ownership or cross selling of this stuff, the ownership suddenly went to this PGs, right? So while bank has been doing a lot of work, the cream has been taken up by the aggregators. So now is the time for bank to claim their rightful place. And when we say why now is the time, as we'll cover next. So there have been fundamental changes in the market, after 5 years. So there is a which spread across behavioral, regulatory, and technical. So behaviorally, we have seen that there has been a habit digitization. I'm covering the second point first, sorry. So because with 83%, all the merchants have now also started using UPI or digital avenues. So there is a fundamental change in how payments are perceived or done. So earlier when we thought, merchant, he doesn't want UPI, he doesn't want digital, he doesn't want, electronic money. All that has changed now. So there is a fundamental shift. Now, what merchants are also looking at are the agencies of trust, right? They have been exposed to market conditions, fly by night operators, different settlement issues. So now they are moving towards sort of consolidation and not having seven QRs or seven payment operators on their shop. And when I talk of agencies of trust, it's bank outright. Nobody has been, even come close. So they are actually looking for banks who can provide a trusted and tech efficient platform. And this we are saying because we have our ears to the ground. We have been speaking to them, and there is a clear bias or preference for a bank-led model. On the regulatory side, there are tighter KYC norms. Earlier there was light KYC model, which kind of pushed the merchant transactions, but RBI, as you are also aware, has been very tight on the regulation of late. Banks have been fined for in past 6 months only. There are 5 to 6 instances where the big and large banks have also been pulled up, and most of the times because the responsibility was with the payment gateway or payment aggregators. Also, there is fraud and risk compliance, wherein RBI has been strict in terms of restricting of the frauds and the reporting of timely reporting of the transactions which are happening on the platform. On technical front, data analytics has come up big time. Data analytics and data science, which kind of provides a real time business KPIs to the merchants, which they have not now gotten used to, and the usage of AI. Now, for on the technical front, aggregators definitely took an advantage because bank focused on core business and complex setups, which has kind of evolved over the decades. So all these changes necessitate the ecosystem now to kind of adopt an approach which is a product based rather than rather than being in the background and servicing the request. So what is the benefit of a product based approach, right? So what it helps is, for the banks to drive the customer relationship. When I say that, it kind of builds a direct connect with the merchant, which unfortunately at present is largely driven by the aggregators. And when you have a direct connect, you have more control on merchant relationship to own and cultivate, and in fact, even cross sell your own banking products rather than being on the whims and fancies of the payment aggregator. Also, it allows you to control the float and the money in your direct control, which and also no need of subventing anything to third parties. So that allows you full control onto the funds which are coming into the bank. On a KYC and regulatory front, the product-based approach would allow for a faster KYC with bank-mandated guidelines, and also provide a reporting ready framework wherein the bank is ready to report as per the RBI or NPCI requirements on day zero, rather than having to chase the aggregator or the third party partners to kind of give them the reports, give them the classifications, give them the count, and so on. The new product based approach would also allow the banks to kind of leverage AI modules, which help consolidate a lot of data which is getting generated through digital output, and by extension control fraud and KYC risk. How it actually translates into business economics is you have a definite plan on business continuity. So it's like it would be your business and your call. You can decide on to how you want to continue the plan, how you want to bring on more merchant, how you want to reduce merchant, as opposed to at present wherein the merchant base is very fluid, and it kind of floats from one bank to the other depending upon how aggregator wants, leaving very less control on your business itself. Additionally, it also allows you to kind of manage the cost of funds and PNL in a better way, wherein you can decide as to if it's a prime customer, you would want to settle in real time. If it's a not so prime or a second tier merchant, you would want to settle in the next day. So essentially providing more control onto your cost of funds and PNL. So with the product-based approach, adopting a product-based approach, the focus is to always empower the banks. And that's where we are looking at. So we are kind of into the business of empowering the banks. And through this, we seek a long-term partnership with the banks, delivering tangible business value, reflecting in the bank P&L. And that's all that can come of a product-based approach. Sorry. Right. So when we merge all this relationship, KYC, regulatory, and business economics together, we kind of came up with a solution which we are calling AcquireX. It's essentially a all-encompassing platform which takes care of onboarding, UPI transactions, real-time settlements, dashboards, which is business KPIs, and an AI fraud engine. Now, the one thing which I want to kind of really highlight here is that this platform is self-sufficient. It doesn't really need you, your people, or your system to get changed, right? It can run independently in itself. And this is deployable all well in within 30 days time period. So coming to the crux of matter, so what's their benefit to the bank getting into the acquiring business? So we are directly looking at about 100 crore plus direct operating profit in year one itself. About 2 to 3x CASA NII growth, which is net interest income growth through float retention, and multifold expansion into merchant network. Now, another question obviously would be why a merchant would join BegoFin, and how would a bank get a benefit when very large aggregators are not able to do that? So economics of it is really simple. So at present, about 1 to 2% is what any PAPG is charging, and we, with our efficient and consolidated solution, because everything is done by us, we plan to bring that rate down to around 0.2 to 0.7%, which is almost half. So merchant would love it. Now coming to the bank, while there is no sharing at present, mostly no sharing, we intend to give lion's share to the bank. Essentially, we kind of are willing to share up to 70% to the banks. So, there is a definite value into the bank. Plus, we are not targeting for any subventions, which is like a normal practice nowadays. That's bank's money and that's bank's business. So, straightway, it's beneficial for the merchant and it's beneficial for the bank. Now, to put things in perspective, if I had to actually call it as to what throughput we are talking about is around 800 crores throughput per month, which will give you about 100 crores direct revenue. We are already partnered and working with a few of the banks who are already there on the call as well. And with one of the banks, we have already, in fact, in the second month, we have pushed around 500 crores of throughput. So, you know, we can go at 100 crores throughput very, very, very quickly. And there are multiple partners who are with us to kind of drive that kind of volume. So AcquireX at present is if you look into the market and look around you, if few of the guys who are working with the aggregator, it's only profitable and compliant solution which is there in the market today. So with all this, as in you might be wondering as to, what is the solution? It's like it's a sourcing platform, it's a risk engine, it's an AI tool, it's an SNR engine. So I'll just clarify that up. So it's a whole ecosystem essentially. It starts with a seamless digital onboarding with fully compliant automated KYC and instant document validation, comprehensive payment processing, real-time insights and reconciliation. The our focus has always been careful that the growth does not come at the expense of fraud, and that's why we kind of specifically developed in past 3 years, in fact, a AI-driven fraud prevention engine, which powers the whole platform. So it comes inbuilt with a fraud prevention engine. At on top of it, for running this program, we kind of provide dedicated program managers who can come and help you get set up and run independently without compromising your additional or existing duties. This platform is also compatible with different other products which are there, which are like payouts, payrolls, connected banking. So if the need be and if there is a want of expansion of digital services from a merchant, this program is well compatible with the other solution which are there in the offering from us. So, while quite a few of you would already know about acquiring, there are people or there are banks who might be new to this and just wanting to understand as to what acquiring essentially is. So it's actually split into three core modules, which is merchant onboarding, transaction processing, and settlement and recon. And there is three core, and when I come to a new age acquiring, it's two more, which is business KPIs, dashboards, and fraud risk management and support. So I'll not spend much time on this. I'll just quickly explain for the betterment of everyone on the call in terms of diagrammatically as to how it comes. So first phase first is onboarding of the merchants. Now over here, you can onboard a PAPG or you can partner with VigoFin in this case onboards as a TSP. Now, why we have chosen to be a TSP is that it keeps us nimble and innovative and allows us to work for and solve for multiple problems for you within the acquiring space or even outside. While being a PAPG would restrict me to service you in, say, let's say in different domains. That's why we kind of, decided that we want to, as staying true to our motto of empowering the banks, we chose to be on the TSP side. Right. Followed by once we are onboarded, we bring our merchants, and once it's onboarded onto your platform, the transaction can begin. And then thirdly, once the transactions have been done, then the settlement is done into the merchant accounts. Now, if you notice that for especially in this scenario, the banks are being credited into the bank's internal account. So in this whole process, this would be the only place wherein we kind of touch bank system in a transaction flow, which is only to deposit money into the account. Otherwise, all the rules, checks, balances, KYC, everything can be taken care by the platform itself. Also, this platform can integrate with your existing platforms as well. If the ones which are existing there, it can work well in tandem with that also. Now, these three core modules, as I said, there are like two more modules with new age banking, if I'm to say, which are, oh sorry, which are reporting analytics and fraud risk management support. Now, all of this work together, orchestrate together to give us a fully functional stack, which is strong enough, powerful enough to operate the whole acquiring ecosystem. So talking about the modules per se, so let's say picking up merchant onboarding. So our system or the acquiring X actually allows us to do a self onboarding, which is merchant led, or it could be bank led. So these two models are prevalent, and Acquire X supports in both these models. So one is merchant can upload the documents, fill in the demographic details, and come onto the platform, or a bank FOS or a bank partner can go to the shop and onboard with the help of a mobile app or a tab-based system. So both of which are available through our platform. And this platform is fully compliant as per RBI master direction on KYC and AML. Now, once is onboarded, transaction bit, I'm not calling out specifically. So once, as we saw in the flow, the transaction happens uh, through a QR code or many existing modules which are there. For a recon and settlement, this platform would allow for recon and settlement to initiate from independent platform. It can reconcile a two-party or a third-party or a three-party recon with bank CBS switch and NPCI data, and then finally make the merchant payouts through one click. It's it's just that there, let's say when your operations teams work the next day, all they have to do is kind of click on the payout button, wherein as soon as they click on it, the money gets paid out. The key call out over here, I will just want to mention is key. When I said that the money gets deposited into the bank's internal account, in this sense, the bank has full control on the fund movement and the real-time view of fund position as to how much is settled and how much is in transition, how much has already come back, which is different from actually an escrow model wherein bank has no control and neither bank can touch the account because it's anyways somebody else's account. So over here, our proposition is unique, wherein there is full power and full focus is to empower the bank. Now, in terms of reporting, I have highlighted only 5, 6 reports in terms of transaction history, cash flow insights, transaction trends, success and failure rates, TDBDs, and compliance reports. There are many reports which can be generated as per the bank's requirement, which is different from one bank to the another. And it's very well customizable and it's very much bespoke, and it can be done independently for each of you essentially. Now coming to the two more part, which is analytics and dashboard. So the platform is provides a customizable dashboard for all the parties which are there in the ecosystem, which is a separate dashboard for merchant for onboarding and also for bank teams to kind of view and approve, or the merchant management. Dynamic control dashboard for the bank, which is a bespoke dashboard design. Again, we can change it, alter it, and we can also modify it. That's the beauty of having a dashboard, so that it's relevant to your business, your way of doing business, and your nature of doing things. Also, on top of it, there is an independent, while the merchant does get a QR and collect capabilities and all, they also get a dashboard, which is their own dashboard, wherein they can look at the transaction settlements, they can initiate different mode of collection through that platform. And lastly, there is AI powered trust engine, which we spoke about, which is the most unique feature which we have been kind of able to build. So in terms of financial frauds, right? So online financial frauds at present, right, they constitute at about 70% of all the cyber crimes complaints in the country, which is which is touching almost 75 now. So the volume of frauds in financial sector is so high that all digital frauds which are happening in the country, 75% of them are financial. RBI has also gotten onto the AI side of it, wherein they have also adopted a new intelligence based system to reduce digital frauds, and especially focusing on mule accounts. So, what we actually do here, or what this AI powered engine does, it provides real time alerts and pattern recognition. And with power of AI, we can also run the mitigants for different frauds before they kind of initiate. There are predefined rules and dynamic rules which play, and they kind of do the complete scan through of the transaction in less than 280 milliseconds, which is near real time. Let's say if this also gets skipped, there is a 52-second fraud lagging flagging post transaction. So let's say even if a transaction goes through, there is a continuous service or risk engine which keeps running in the background, and if there is any fraudulent transactions, it's able to repeat it within 52 seconds. So once you get a trigger, then you would be able to cancel the transaction and initiate the refund, thereby preventing the customer loss before the money has actually settled into the merchant accounts. So we have already been piloting this with 3 4 banks already, and the fraud detection accuracy is at about 85%. And the good part is that we are committed towards AI, in our in all our nature and sense. And there is a dedicated team to kind of who continuously works on the data, works on the bank data, works in our own data. So that way we are continuously working. It's not one time thing that, we have made AI engine, it's very good. It's not that. So we are fully cognizant of evolving nature of frauds, and we have put in a dedicated team, a team of data scientists, a team of machine learning experts to kind of keep on with this. Sorry. So what it does is while we have talked about onward flow, it also takes care of the reverse flow. It also works for dispute prediction and management. So it allows us to kind of see if which card merchants or which kind of merchants would be prone to or would be going to be defaulting in this settlement cycle. So it gives us that. There is auto AML monitoring also built in this product, which kind of allows us to look for any abnormalities in transaction, in dormant account becoming active, uh, risk threshold, just gliding beneath risk threshold for all the transactions. So all that gets highlighted and flagged for bank's purview. It also has supports fast CPV with background verification through different lists like FATF, PEP, MCA, web crawl. So this really speeds up, and this becomes really important because if you look at last month, there was this scam which CBI has uncovered with around 8.5 lakh fraudulent accounts were opened across 700 bank branches. So when I say 700 bank branches, it's like covers almost all the major banks. So it becomes very important for to have background verification in place, because while we open accounts, we do not want any fraudulent or non-proper accounts to be coming with us, and we are very cognizant and very honest in that regard. And also there are suspect triggers which can be built in, and needless to say that while there are AI based things which the system does, it also allows for you to kind of set your own rules, set your own triggers, and to control the business in the way you want, right? So what with this product based approach, or when you get into a consolidated all around product, you kind of are looking at a significant growth into your KYC, which is onboarding of the merchants. And we can easily take you from, let's say, from a year one, let's say if you're not doing anything, from 200 merchants in year one to 400 to 800 in 3 years time, which essentially results in a CASA growth of about 600 odd crores, over the years. Fraud detection, we would be, and we are so confident of our engine that in the first year itself, we'll be able to bring it down to almost fifth of or sixth of what it is presently. And thereby we continue working with you to kind of bring it further down to near zero position. So with all this built in, there would be a significant increase in business account usage. And also, if there is a value added banking services which is required by your partners, we would be more than happy to provide that. Now, sorry. Now, while few of the banks have already been there on acquiring and they have matured processes, and this is especially for the ones who are standing on the edge and trying to decide as to whether to take the leap or not. So we not only, as I said, we are in a space wherein we are able to help the bank in whatever aspect they need. So and when we do or when we design any products, business compliance for us is not non-negotiable. We other do compliances first and then do the business next actually, if you ask me. So for the banks who want to half there not there, we can support in terms of policy drafting and adherence to policies. We can build the standard operating procedures and get the training for the staff. Will also help with responses and justifications for the regulators which might be coming with respect to the setting of the business. uh, we also, as I said, we have our own AI risk engine, so we are pretty adept in terms of dispute and fraud risk management. And for all this, through all this, we provide round the clock 24/7 technical support. And it's the support is such that the bank need not reach out to us. The Our own team will be sitting at the bank premises. It will be within your reach to just call them and get your queries resolved. So that's the kind of engagement, or that's the kind of support which we are looking to provide the banks. Now, to do all this, or to get onto a new age acquiring, riding on the UPI wave, there is different modes which we provide, which depends upon the life cycle of the bank as to where they are. So it could be level zero, which is a manual based or a manual driven business, from onboarding to settlement to everything else. It could be an simple API based or microservices based structure in the next level, or it could be a fully AI driven, fully automated, AI powered integration. So, and to all this, and especially to do all this, and especially since we talked about the platform being so modular, so it would only take us from a period of 10 days to 30 days to kind of derive this kind of volume and values and the business economics which we talked about. And in doing so, we take care of infrastructure, which is like procurement setup, without disturbing any of the bank's existing infrastructural setup, or without taking up any of the bank's time. We take care of the security with respect to the information security, transaction risk, compliances, and we also provide a team of experts which will help run the show for the bank. And in the process, if as the bank wants, transfer the knowledge to the team and get them up to the curve to on the acquiring business. So all in all, if I look at the time and space wherein we are at, right, it is actually the correct time for us, or for the ones who are not there and for the ones who are already there in the acquiring space, to kind of either join or rethink on the strategy wherein they can build the businesses within the bank, within the control of the bank. And WeGoFin, in that aspect, is there to kind of empower the banks in any which ways possible. be it technical, policy, risk. So we are there to help all of you get onto the UPI acquiring edge. So with that, I'll you know close my presentation, and with a thank you to IBA and Srinivas sir especially to for being kind enough for arranging this. And if there are any questions, we'll be happy to answer. Yeah, one sec, give me a second. I will stop this, right? I'll stop the. Can I access the chat?
Yeah, you can remove the presentation.
I'm just. Yeah, I can access the chat. So there are two which I see. Which one is the recent circular issued by NPCI is for QR issuance, which is permitted for cooperative bank. Will a cooperative bank be allowed to enter into an agreement with the BigOfin? Absolutely, sir. As in, we are there for each and every bank, as I have been mentioning during my presentation as well. Like few of the banks may be well advanced, and few of the banks who might be thinking to getting into this space. And this it's a very promising thing, wherein you know, one second, very promising thing which has happened wherein NPCI is allowed, and we are there not only as a technical platform provider, we are there in the capacity of policies, framework, and any other support which is required. So answer is an resounding yes, and in terms of support extended, we are happy to extend supports in all aspects of getting onto this UPI acquiring bandwagon. Now Ajesh sir is asking how MDR for credit line and credit card will be collected from merchant in case of real-time settlement. So, sir, MDR real-time settlement would happen. So, I did not talk about the details of it. So, there is a detailed charge engine which is also built into the system or into the platform which we provide to the bank. So, any settlement which is happening, and of course, for charging credit cards acceptance, once the merchant has consented onto the platform, we can directly uh, once the when the next day your team comes and they click on settlement, the calculation and everything would have happened, and only the net of amount will get settled into the merchant account. So it would be a cut and pay thing. So we'll already have the money for different credit card or credit lines which are there working on the UPI. Sai Lakshmi Rao's question is, how is the KYC done for the merchant? So KYC is a standard process, and it's as per how RBI has prescribed. We and depending upon the type of the organization, if it's a sole prop, if it's LLP, or if it's a private limited, public limited, depending upon whatever KYC AML has prescribed, we kind of adhere to that, and we kind of validate as much possible or as many open APIs which are there for, let's say, PAN, GST, Aadhaar, MCA, PEP, FATF, you name it, we have it. And if there are, and of course, bank have their own controls which are built in, so it's very modular for us. If there are anything additional which you want, which is kind of leads into second question rightly, because how is the current account journey stitched together? So we can stitch. So as I was leading into, so different banks would have their different uh, set of rules wherein they would allow to open a current account. So if there are any more requirements, any more APIs, any more checks which are to be built into the system, we can absolutely build it. However, our present flow itself is compliant with the master direction on AML KYC from RBI. Okay, third part is presume UPI switch is yours. Can you integrate with the bank switch? Uh, Absolutely. So I'll read it like this. So we have our own switch. So if some of you don't have the switch, then we can get this complete stack, and without disturbing any of your system, it will start functioning. So you absolutely really don't have to do anything. Secondly, if the bank already has a switch, then yes, we can integrate. The platform is such that it can integrate independently. You would have to expose your APIs of the switch for, let's say, acquiring in this case. And if you are interested in TPAP or an issuing model, then those APIs as well. But only restricting it to the acquiring piece. Once you expose your microservices for different UPI calls, we can definitely integrate and give this platform for merchant onboarding. Shrikant M. There is no MDR for UPI at the moment, apart from the UPI on CC and UPI on prepaid. That is correct. How do bank earn in that case? Okay. Is there any control on merchant onboarding at banks end? Fair enough. So you are right in saying that there is no MDR, and then absolutely you cannot charge MDR. So in my previous life, when I was with a bank, I did something similar, and it was not a happy scenario. But yeah, you cannot charge an MDR. But as I said, if you, I've no Vigofin as as a TSP, which is a technical service provider for you and for the merchants as well, wherein we provide the merchants with ready merchant pipelines. We provide them with dashboard, which we spoke quite a lot about. We provide them with fraud risk engine, integrated fraud risk engine, to kind of help them reduce frauds onto their shops or onto their websites. So this offering is a package service. So we charge a convenience fee or a subscription fee kind of thing to the merchants. It's not an MDR, it's not a per transaction calculation. So while we did talk about per transaction calculation in an earlier question, which was specific to UPI on CC, but for a normal transaction, there is no MDR. We are not calling it an MDR, and it is not an MDR. It's more of maintenance and service charges for this kind of services, which is AI powered FRM, bespoke KPI dashboards, different support, on call support. So it all rolls into that. Now, how do the bank earns is, I'm sorry, when you're typing, it's scrolling up and down. I'll just, okay. Is there is there any control on merchants onboarding at banks? And so, while we put in all the due diligence from our side on this, and bank will definitely have an oversight, sir. As in, it's a given. So, we there would be an access to the admin platform or an operation platform or a KYC onboarding platform specifically to the bank as well, and depending upon how the banks want to run the business, it's totally bank's call if they want to run it through the program manager, which can be through a legal agreement, can work with the bank, or the bank employee itself can access that and either approve or reject the incoming merchant. All right, Miss Poonam Gavane. If merchants given all KYC documents, then how we can analyze merchant is coming for gaming platform or genuine business? Good question, ma'am. So essentially, when we say we acquire merchants for you as well, so we actually work through different APX bodies, and we individually go and vet each merchant. So it's not like we onboard merchants which we don't know. So, and we reach out to these merchants through different federated agencies or confederations, wherein they are actually registered merchants and part of some association and part of some bodies. And even after that, we do kind of do our due diligence, we do our CPV as well, to kind of ensure that the merchant which we are getting onto the platform is 100%. And depending upon the risk appetite of different banks, we very clearly specify as to what category of the merchant is this. And bank, as we were discussing in the previous question as well, bank has the full right to kind of decide onto the kind of merchants they want to take or not take, essentially. Shiny, uh, sorry, so Shiny G is asking, can the account be maintained with the bank, or only settlement will be through the bank? So it's like the account is of the bank only, sir. It's not, we are not maintaining any account. As I said, unlike an escrow model, I can understand this question because that's what you have been used to. So it's different for us. Our plan itself is that the account is of the bank only. It would be your account, and so it would be within your bank, to answer that questions. And the settlement also will be run through this account. So as I said, it would be on the bank's discretion. If you want to settle on a T+1 basis or a T basis or a T+2 basis, depending upon the kind of relationship you have with the merchant. And it would be totally under your control, which I understand this question because usually now the practice is that every settlement is happening almost 8 times a day, especially with the aggregators, because they want the money quickly within their pool account or individual accounts for settling. Uh, Sai Lakshmi ma'am is saying, can we connect over a call? Absolutely, ma'am. So what we'll be doing is we'll definitely be taking down these questions again, and we'll definitely reach out to you, and we'll arrange for whatever comfort you want in terms of demo, in terms of model, in terms of deployability, and we can take it further from there. RBI approved PAPG for online transactions. Okay. Requesting for offline QR, can bank issue it? Absolutely. So there is a PAPG license which is there. So I'm sorry, this was from Pallavi ji. So RBI has approved for PAPG, but for a bank, it's a given. So bank by its nature can take deposits and transfer monies. So there is no separate uh, license which is required for a bank to do this. So that's how this ecosystem has evolved, wherein the bankers themselves are thinking, if we can do it, you absolutely can do it. PAPG are the ones who needs validation. Bank needs no validation. In some scenarios, yes, you need to inform the apex bodies in terms of venturing into new business, but that's true for any new business line. If you are getting it, if you're, let's say, if I'm launching a mutual fund backed account, or if I'm launching a with the account or a pension accounts or a special kind of accounts, in that case also I kind of good practice to inform the regulator. So that way there is an information which needs to be provided. But in terms of licensing condition wise, absolutely 100% the banks can issue it, and that's where we should be heading, looking at the market essentially. Now, LXG, yes, sir, absolutely. We do want to connect, and as I said earlier, we would be more than happy to discuss. We would be more than happy to arrange anything and everything, every demo, every comfort you want. We'd be, more than happy to provide. We can also discuss, or even if, not even about the product, we can also help you understand. I'm not sure if I was able to cover it enough or not. If any of the banks who feel that they want to understand more around acquiring space, we would be more than happy to come down to your place and or host you, either which ways you feel comfortable, and get it in detail. How will you control the misuse of VPA on illegal websites? Okay, all right. So that's again a good question. So we already, I did talk about our FRM engine. So and what we do as a part of that FRM engine is we kind of proactively do a lot of web crawling, and we have partners to do this. And we understand that we can't do everything by ourselves. We do ourselves. We have partners who have expertise into this area as well. So what we do is we kind of go through phishing sites, look at suspicious domains, leaked credentials, our dark web scanning and fake listing. There are a number of things which we do to kind of understand and see if certain aspect of the transactions which is happening has been reported one way or the other into one forum or the other. So that ways we are able to track VPS. VPS is just one thing. We are able to track much more than VPA in terms of even if the goods sold, the authenticity of the merchant itself, irrespective of VPA or not as well. Sorry. How is it different from having a escrow account? Having a escrow account, sorry. Aravindanji from KVB is asking, how is it different from having an escrow account? Having an escrow account with the bank will have float. Fair enough. So, bank will have float, sir. That is correct. But in terms of control over that fund, is the bank would not have. So, at times, the aggregators, in terms of settling to the merchant. So, very large aggregators, in fact, which I know, in fact, all of the large ones which are aggregators today, they settle instantaneously. They don't even they in fact settle 8 times during the day to the merchant. So in terms of the float which you are which you have mentioned, it rests into the bank, but what you are left with is essentially 1/8 of the business which has happened throughout the day, which is the last cycle, which actually does not get settled. Everything else gets settled. And I have worked with with ICICI, with Geo. I was on the other side, so I know as to what we are left with is 1/8 of the everything, and that too is the last cycle, so not much essentially. So with this, what would happen is the fund is in your control. Nobody is demanding it from you, right? You can set the terms, right? So while you would have the not only 1/8 of the float, you would have the control of the funds, view of the funds. You can dictate your business the way you want to run it, as opposed to with going through an aggregator. And we are make enabling you to do that, because fintechs, why they are able to do this disproportionate power is because they have the platform, they have the technology, and very conveniently they have marked the merchants as theirs, unfortunately. So that's why they are going to do that. With this, you will have all the power to kind of run your business, to manage your funds, and to have the complete visibility on what and where all of the fund which is into your account. All right, Mr. Nikhil B, could you please walk us through the details that merchants are required to fill during the DIY onboarding process? Okay. Also, what verification steps are carried out before enabling them for UPI collections? All right. So, in terms of KYC onboarding, sir, so there are steps which I mentioned broadly, right? So there are demographic details which the merchant fills. There are like 70 odd fields. I can't talk about all of them, but majorly they kind of fill in their addresses, their individual details, business details. We validate all these individuals' PAN, Aadhaar, and businesses' credentials through MCA, GST, and then they kind of also declare the year of our incorporation, how long they have been in the business, if their premise is rented or if their premise is owned, right? Is there any delay between incorporation and commencement of the business? So which kind of goes towards the risk scoring of the merchant. In term, they also fill in their daily, monthly transaction volume and value. So all these details are kind of already taken from the merchant, and all of those are verified. So whatever is verifiable through open APIs or public APIs, we do verification of them. As I said, we are already doing, let's say, 10, and if there are like three more which bank wants, which may not be there, let's say, and in that case we'll be able to integrate them seamlessly into the flow as well, so that won't be a problem. uh, and so, what verification steps? So, as I said, so whatever is public available data through public infrastructure, we do that. Apart from that, we are also attached with different, negative lists, which is provided by, let's say, Visa, in case of neglect, or in PEP scoring, right? As to how exposed the person is, as opposed to a self declaration that I am not connected and that's done. We do not believe that. We kind of do a scoring on how politically exposed a person is. So there are different checks are there, and it's definitely over and beyond what uh, you know master guidelines is. However, if there are and of course each bank would have something different. If there is something extra, we'd be more than happy to kind of incorporate into this. Thank you, Sai Lakshmi ji. Thank you, Poonam ji. Mr. Ayaz is saying, if a fraud merchant bypasses the FRM and fraud occurs, whose liability will it be? Because this is not a PA arrangement. So, as I said, sir, in terms of we are controlling it two ways essentially. If you look at it, so one is the real-time FRM bypass. Even after that, there is this background check and score which keeps on running onto the transactions, which provides the result within 1 minute. So let's say if something skips on a real-time check, it can always again be corrected within 1 minute. And even if you are settling 8 times a day, it will be longer than a minute, right? So that can be countered there. However, your question, respecting your question, if it bypasses that, which means if it's altogether bypasses FRM, the we are willing to put our you know what should I say? We are willing to put our I'm missing the phrase, but we would be willing to kind of come on board onto the fraud responsibility, and will acknowledge and will take the responsibility onto us. However, we are very sure in terms of the quality of the merchants which we are procuring and the type of businesses which we are generating, that would be to a minimum. One sec, it's scroll down. All right. EFRMS TMFM. All right. Sir, what is the prevention mechanism for following in terms of fraud? How does the bank benefit financially compared to routing transactions through a PA? So, sir, in this case, as I was saying, the fraud control, or in terms of the metrics, while we would definitely be providing the metrics and the rules and the and the contours within which a transaction should fit, and we take banks feedback, or banks rules which can be filled into this engine, as opposed to a PA which have their very straight cut rules which they probably don't even work with you or share with you. So all your insights in the FRM side or in the fraud risk prevention side can be baked into this engine, and this platform is what is being offered to the bank directly. So even if you, let's say if you have your Clarify, Drona Pay, fin this Palladium, so whatever you know uh, uh, whatever fraud engine you are using, this can work on top of it, so you are getting a benefit of two directly. And this helps you better control your funds, as opposed to controlling it through a payment aggregator. All right, Pankaj ji is asking, what is the logic of politically exposed scoring? Is this just a match or with some lists only? So it kind of, sir, extends into the person itself, wherein it's directly exposed, or is you know in the chain of things, whether, let's say, I am not directly, but I have some other company, right, wherein I am partner with let's say MLA or whatever, or somebody who is politically involved, right? So I kind of not only look directly onto you, I kind of go on and check whether you have partnered with somebody else, and of course in that case your the score of exposure will go down, because I am working with someone who is working in some other company, or who has founded some other company wherein he has some exposure. So my direct exposure will go down, as opposed to, let's say, if that person who I'm working with is directly kind of is exposed to a political entity. So there are different extensions which also run, and of course if it's a direct connection, it goes a yes or no. But let's say if it goes through an extension through a third company, wherein a third partner is a politically exposed person, then the score would be typically a little lower. All right. Then Abhinash sir is asking, presently with which bank your solution is live, whether your FRM solution is rule-based engine. Definitely, sir, it's 100% rule-based is there. So you can set up whatever rules you want, or it could be threshold based, it could be volume velocity based, it could be time based. So all that is 100% there. in terms of being live, we are live with uh, quite a few major banks. If I'm to say, I can probably reach out to you and inform and discuss. I'm not sure if we should be calling out here. If that helps, we'll reach out to you, sir, and then we can discuss in detail the banks which we are working with. And it's upwards of 6 banks, and the large banks, that too, not small banks. Thank you, sir. Kiran G is asking, will the solution be deployed on premise or in the cloud? uh, we are okay with both. We have a cloud-based solution. We can, in fact, we can do a cloud-based first, and then if your bank or compliance or InfoSec says to move to on-prem, we'll do on-prem. We can start with cloud. We can go to on-prem. We can start with on-prem, go to cloud. So everything works with us. We have a team capable of either doing it on the cloud or either doing it on the premise as well. And as I've been saying, we kind of do a full program management as well. So there would be a team, a dedicated program manager who would be sitting and who would be helping the bank with running of the business, would be helping the bank with transitioning from a cloud to a on-prem, or on-prem to a cloud, or with respect to a movement of data or information or KYC. So all of that is fully within our control, and depending upon the bank's policies, we are okay to deploy it in any of the scenarios, both on-prem and on cloud. All right, sure. Thank you, ma'am. Okay, I
I think,
think we,
Nishant ji, I think all questions were over. Thank you, Nishant Shekhar, for excellent presentation. Then answering all the questions very patiently. Very pertinent questions asked by the participants. I thank all the participants for their active
so
participation. And we will share the presentation to all the participants, and all our IBA member banks will be sending
right, sir.
presentation separately.
And
Thank you.
sir,
Yeah.
in the chat also we have put the IDs and the numbers if they want to connect, because quite a few banks requested for a discussion separately. So we have put that in chat also. So if it will help if you can percolate this as well, if it's all right,
Yes. Okay. Hmm?
please. Sir.
Right.
All right.
Okay.
Thank you,
Thank you.
everyone. Sir.
I think we can
Thank
close
you so
here.
much.
Thank you, Nishanji, once again.
Thank you so much, Srinivas. Sir.
Token team. Thank you.
Thank you, everyone. Thanks. Bye.